Hello and welcome to Mel on the Street. I'm your host, Mel Schaefer, and today I have the pleasure of talking to Kim Bolton, President and Portfolio Manager at Black Swan Dexteritas. Thank you for coming in today.
You pronounce it very well.
Did I?
Yes.
That's fantastic. Perfect start. Can you start by telling the audience about the tech fund, just in general?
So Black Swan Dexteritas started up in the spring of 2013.
Okay.
And it originated from some tech entrepreneurs that had made some money and wanted someone to actually manage their money as they would deploy it into other private equity venture cap opportunities. And as it turned out, they were sort of more interested in cash management. But I said I'd do it. I was actually at that time at CIBC, manager of managers, and actually one of my babies was the CIBC Science and Technology Mutual Fund.
Okay.
So I said that I would move and help manage these tech entrepreneurs' money if I could build a business. And my thinking was that, every public company originates as a private company.
Yep.
And so I knew the publicly traded technology arena, but I thought it would be beneficial, give a bit of an edge if I actually had a relationship with tech entrepreneurs to sort of find out and get some insight into what was happening in their valley on the private equity side. And they said, sure. And so we started off. With any fund, you can't just sort of blast out of the gates and go around and talk with people. You need to build up a track record. Mm-hmm. So we spent the next 6 years building up a track record. And then it was sort of 2019, 2020, sort of good timing at that stage, because I do a lot of Bloomberg interviews too.
Yeah, I've seen.
And so when the pandemic came, everyone was at home watching TVs, and so I sort of had a platform to actually talk about what we do. So anyway, we have sort of two business streams. We have, on the one hand, a tech fund, a tech hedge fund.
Okay.
And on the other business line are separately managed accounts. So it originally started out with the tech fund, seeded by myself and these tech entrepreneurs. Everything worked out very well, and then we proceeded to get that platform on Bloomberg for people to actually hear about what we were doing. And then one thing led to another. The assets started to grow. Performance was very competitive. And then investors started to talk with us about managing other sort of asset classes, beyond just sort of the technology arena. And so that's how we built the business.
It's really interesting. I wanted to ask you, sort of a two-part question.
Okay.
In terms of tech, it's not a pullback anymore, right? Like, we're talking about a market correction territory now, mostly spurred on by, the Fed policy, recent Fed policy. What do you see happening sort of in the future in terms of tech as a whole, NASDAQ, and the market? And then if you can answer that, and then tell me a little bit about how you've had to manage the portfolio, or changes that you've made in the portfolio due to this correction.
It is a correction. I truly don't think we're going into a recession. And in fact, if you think back, in the matter of 3 weeks, middle of July of 2024 through to the second week of August, we had a 13% correction.
Okay.
And that was also instigated by sort of a pivot by the Fed. So actually, different reasons for this correction, very geopolitical and so on. But it is just a correction. Not quite sure how long it's going to last. You could see it last Friday that, there were some bottom fissures, and there were some technical support levels just below here. But I actually think, and so what we did just to back up. So here we are, the middle of March, and so it was back sort of the second week of February. You know, January was actually a decent month. We were up like 2.5% in the fund, sort of like that in the separately managed accounts. And then things started to unravel after the inauguration on January 20th.
Right.
You know, if you think back over the last couple of years, 2023 and 2024, you had these corrections, but market participants really used corrections or pullbacks as a buying opportunity. So people always bought in the dips, but come the inauguration, everything sort of changed because of the uncertainty.
Yeah.
And so market participants pivoted and started to sell on any kind of rally. And the rallies were very, very shallow in any sort of rally. So we actually, back middle of February, started to build up some cash, and we got about 20-25% cash across the fund and also the separately managed accounts. We built the hedge. So in the fund, there are two parts to it. There's the stock portfolio, and that's about 25 to 30 stocks. And we have entry points and price targets and so on. And then as an overlay, if we see sort of storm clouds on the horizon for fundamental, technical, or capital flow reasons, we put an overlay of short equity indexes on top of the stock portfolio. Does that make sense?
Yep.
Okay.
Yep, it does.
And then, so we've gradually been building up that short equity index overlay, the hedge, on top of, you know, a portfolio that is like 80% invested, 20% cash.
Okay.
And our hedge now is actually up to just over 70%.
Oh, wow.
So that sort of tells people, you know, what we're thinking. In other words, we think that it's still you sell on rallies.
Okay.
And I wouldn't be surprised if it's going to be that way at least until the fall. Because if you think about it, between now and sort of the fourth quarter, this is when the Trump administration can sort of do their broad-based changes that they particularly want to do on the trade side, right? So like ever since the World War II, the U.S. has been fine in actually having a trade deficit. In other words, they buy goods from elsewhere, and it was great for the elsewhere being Europe and Canada and Asia and so on. But now he wants to level the playing field. And I think he's basically got maybe another 5 or 6 months left to do that, because think about it, like next year is the midterms.
Oh, right,
So
yeah.
he's going to have a good year. So he's going to upset the apple cart between now and the fall. But then he's going to have to pull back, and he's going to have to focus on maintaining his strength in Congress.
Right.
So that's sort of best laid plans, and everything can change.
Yeah, and he's not so predictable.
Right.
Right. So yeah, I can see why the funds are, even in the individual investors and traders are sitting back a little bit more on the sidelines.
Yeah, you know, here we are, the middle of March, sort of in the fund and also in the separately managed accounts. We're down sort of between 6 and 7%, which isn't so bad. If you look at the indexes, they're down anywhere from sort of 10 to 15%, you know, for the S&P and the NASDAQ and the Russell. So to make back 6, 7% and get back to flat, it's very doable.
Right.
You know, especially with this volatility these days.
Yeah. Yeah. So they're probably related, but if you want to tell me a little bit about sort of the largest like underlying holdings in the fund, and then those probably align with some of your stock picks if you have stock picks.
Well, we were lucky and smart that we really sort of got on the artificial generative AI
Okay, yeah.
bandwagon, going back all the way in the middle of the pandemic, so sort of 2021, and particularly because I have a number of analysts that are actually over in Israel, and some of my investors are in Israel, and so we get quite a bit of information from them. You know, Nvidia, back in 2017-18, they bought a company called Mellanox. And Mellanox is the brains of the graphic processing units that Nvidia is the king of the hill on right now. So we were good and lucky in getting in on, on that train ride. And then, all of a sudden, it was in November of 2022 when Microsoft put $10 billion into OpenAI, and it just opened the floodgates, and that's what everyone talks about, right?
Yeah.
So, the infrastructure is in place. A lot of the modeling. So the infrastructure for the cloud and the data centers and so on, that's where all the data is housed, and then they brought the models in to actually interpret the data. And now they're trying to figure out ways of actually how they can use those models for you and I and enterprises out there to make them more efficient and more effective in what they do. And it's happening.
Yeah.
It's happening right now.
Well, and the evolution is happening really quickly.
Yeah.
Right?
A lot quicker than everyone thought, right?
Yeah. I wanted to ask you about agentic AI.
Yeah.
You were telling me before sort of the newest thing, or one of the newest things.
So I passed along a diagram, and we refer to it as the Agentic AI software ecosystem. And so it sort of has three layers, and it's a circles. And so the bullseye is all about that infrastructure. So it's the data centers, it's the cloud players, and then the semiconductor providers, the chips. So the designers and also the manufacturers like Taiwan Semiconductor and so on, and Samsung and Intel. So that's the bullseye. And then around it, there's this sort of the development platforms that actually help the AI accelerators, the chips, actually to do their job, and it gives them the tools to actually allow the modeling, right? The models, let me give you an example, like the biggest open sourced model is Llama, and that's Facebook's. Okay. Right? But then they have, like Amazon has one. Actually, they partnered with Cohere, the model group out of University of Toronto. Okay. Anthropic and Mistral out of France and so on. So all of the big companies have actually partnered with these models. And now the models, sort of the broad-based models, but the models can also be like industry-specific for like healthcare or maybe for entertainment. So the Netflix will have their own model, and the healthcare companies will have their own model that is actually sourcing the data that they need to actually have, and then the framework actually brings together the models so that this agentic AI, they're sort of like, you probably heard over the years about virtual assistants, chatbots, right? Yep. But agentic AI is where they're almost like autonomous virtual assistants. So virtual assistants, normally what we think about virtual assistants is when you call into a service provider, and then they'll ask you a lot of questions, and they'll try to guide you through the maze to where you want to be. Now, autonomous virtual assistants actually do their own reasoning. So, in the future, eventually, you will have these agentic AI assistants out there that will do your job and my job.
Oh, no, yeah.
So as some of our research fellows say, we'll have an agentic, like for our business, we'll have agentic AI assistants that will do research. We'll have agentic AI assistants that will do the trading. We'll have agentic AI assistants that will have been trained up in compliance.
Okay.
Other ones that are agentic AI assistants that are trained on sales and marketing. But they learn as they do their job, just like you and I do, right?
Right.
So that's what's going to change.
So they'll be helping you at Black Swan, right?
Absolutely.
Doing these jobs, but then how in terms of investment are you also taking advantage of this?
So for the past few years, and just before I go on, I guess like the agentic AI assistants are sort of like the next software as a service. Everyone talks about software as a service, right? So I'll give you an example of Salesforce, okay? So Salesforce actually came out with this software as a service, which was a machine learning assistant called, tip of my tongue. It'll come to me. So they have this assistant that can actually talk with their clients and guide them through to find out the solution that they're trying to their problem, that they have, right? But now they're going to have one that is actually not just sort of coded, like most virtual assistants are coded, but they'll have reasoning power. And so they can actually develop and think for themselves. There's some regulatory and compliance and governance issues that are surround all that, but everyone's sort of on board to actually deal with that. So in the bullseye, we still own companies, the infrastructure names of Taiwan Semiconductor, who is the largest foundry in the world. They do about 55% of the chip manufacturing. And then we own a whole bunch of the designers like Nvidia, AMD, Micron. Now Micron is sort of in between a foundry and a designer because they do designing, but they also do manufacturing. So we have the infrastructure players, and then around that, then we'll have sort of those agentic AI development platforms, and those are the likes of the models, like what OpenAI has, what Google has with Gemini, Anthropic and Mistral. So now we only participate in the publicly traded technology arena. Some of these are actually private, but it's important to follow the private ones because eventually, for example, coming up in the next 4 to 6 weeks, there will be an IPO by a company called Databricks, which is a massive company. It's like $60-70 billion, but this is one of those sort of second-tier companies that are development platforms. And then on the outer circle, that's the agentic AI. And so that will be companies like Salesforce, like ServiceNow. It's sort of the next generation of software as a service, really. But then not just for consumers, but agentic AI assistance for enterprise. So it could be companies like Mundi, who actually facilitate. They're an agentic AI that sits in the cloud in a data center, and it actually makes all of the software as a service and agentic AI players all work together much more smoothly and more efficiently. And then you have another one just like that is a company called Datadog.
Yeah.
And they're sort of like they're like the lifeguard. I always refer to them as the lifeguard in the data centers. So that's how we participate. And it's just an evolution, right? And it's just happening so much quicker. You know, we're really, since that November day, early November day of 2022, here we are, you know, only 2.5 years into it, and look how much has changed. It's
Yeah.
truly amazing.
Yeah. How many holdings are there, do you have within that tech fund?
Sort of between 20 and 30 single stocks.
Okay.
And a lot of it is geared toward that ecosystem of generative AI. Yeah.
And any smaller, like small cap
Yeah.
stocks?
Well, let's see. We have a couple of Canadian ones. One which is huge, which is Constellation Software.
Right.
But then we have also, let's see, a company, WELL Health. And WELL Health, actually out of Vancouver. So they're actually going into doctors and dentists' office, and they're putting agentic AIs in their offices, right? And it's cheaper. You don't have to pay agentic AI any benefits.
Right.
And so, yeah, WELL Health is a great example of how they're really harnessing this generative AI and agentic AI assistance.
Yeah. So just very last,
Yes.
three sort of, I don't even want to say stock picks because of the current economic environment, but maybe three stocks that you think people could be watching, keeping an eye on in the future. It doesn't even, not the next 2 weeks, but over the next year.
Yep. Well, I think interesting. So I would pick sort of three out of that agentic AI software ecosystem. In the bullseye, it's
Okay.
very, very easy. It would be Nvidia.
Yeah.
You know, as Warren Buffett always says, if you can find a monopoly that is legal, that's where you should invest.
Yep.
And so Nvidia, with their Hopper, they had Hopper previously. They came out in the last 6 months with their Blackwell chip. They're going to come out with a new one later this year called Rubin. And they're sold out for the next 2 years. And it's, you know, there are some players out there like an AMD or a Broadcom. Broadcom would be sort of my second choice within that sort of designer manufacturing of those AI accelerator chips. Around the other side, I would say two in sort of the development side of things that are actually massaging the data. And number one would be Palantir.
Okay.
Like Palantir is off 35% since the beginning of the year.
Yep. These are all big retail favorites as well, right? Like Nvidia, Palantir.
Well, I don't know how much of a favorite they are
Maybe
now.
not right now.
Because for those that bought Palantir in the last 9 months, they're probably underwater.
Yeah.
But this is a generational opportunity
Yeah.
to get in on the leaders on those development platforms. The other one that I would say would be in that sort of development framework side of things would be, I don't know, either like a ServiceNow or a Salesforce, but big names, right?
Yeah.
And everyone says, well, are there smaller ones? Yes, there are smaller ones out there, but, you know, to do this, as you've seen, they're saying like the 5 data centers are going to spend over $300 billion just this year.
Wow.
On infrastructure and getting the right hardware and software into the data, into the cloud. To be able to have these other agentic AI companies to actually work it. And so that's why, for example, I mentioned before about Cohere, which is the modeling group out of University of Toronto. Very, very cutting edge, but they needed money. And so they actually partnered with Amazon. So small companies, and there are a lot of them, here, down the States, over in Israel, they're all over the place, but they're all trying to partner with the guys that have the deep pockets.
Yeah.
And then, so in the bullseye, I said Nvidia and probably Broadcom in sort of the agentic AI development platforms. That would be the likes of Palantir and maybe ServiceNow and Salesforce. And then finally, when it gets into the AI-powered agents, I would, some of them have pulled back dramatically, like for the enterprise side, it would be Mundi and Datadog.
Right.
And for the consumer side, I would have to think maybe like a Workday or Intuit. Intuit has really got onto this agentic AI. They're the ones that do TurboTax and everything.
Right, okay.
And so now if you go to TurboTax, that is owned by Intuit, they have these agentic AI agents. And they just launched them like in the last couple of weeks.
Oh, wow.
And so you can go on their platform and those agentic AI agents are actually sourcing those broad models that are sitting on top of the chips and with the likes of Databricks and so on that are massaging the data and actually interpreting it for tax reasons. So it's starting now, but I bet you by next year, if you go to TurboTax, you'll never talk to another person again.
Yeah, well, all these places, like when you try to call somebody, you can hardly ever get someone on the phone, right? So that'll be, we'll have actually someone who will be able to guide us through these things. Not someone, but something.
But doesn't it drive you crazy when you call, I don't know, Air Canada or Rogers and they ask you a question and they're repetitive and so on, and it's really infuriating.
Yeah.
So, but with these agentic AI agents, all of that will be so much better, and it will be even better. Like we deal with a lot of financial institutions, and so many of the financial institutions still have their staff, their support staff, working from home. And the answer you get from a TD support person in Saskatoon will be a very, very different answer from the TD agent or support person that is here in Toronto, right?
Yep.
And so in the future, you won't get different answers. You'll get the best answer.
And it's exciting.
Yeah, it is.
It just so much is happening, right?
Yeah.
And really, really quickly.
Yeah.
It's
That's why, just to go back, Mel, to the beginning when we were sort of talking about from 30,000 feet about all this disruption coming from Trump, I truly believe people will look back and thank him, maybe not for the disruption and all the silly pranks that he does, but they'll thank him for actually giving them the opportunity to actually buy into these companies because they've come off so much.
Oh, I see. Right.
Right? It's a fantastic opportunity.
Yeah. Well, that's awesome. Thank you so much for coming in. To talk to me. It's been a pleasure.
Nice to be back with you. Thank you.